Hi everyone, and welcome to Investing Strategies. It's Alissa Coram with Investors Business Daily from the NASDAQ market site in Times Square. Today we're providing an update on the current market environment. After sharp selling on Friday, stocks are looking to move higher amid renewed trade talks. We'll outline the key technical levels to watch. We also have a cannabis analyst here to break down the state of this new and growing industry, and we'll take a look at two potential pot stocks to have on your radar. Now, when you're selecting stocks in any emerging trend, it's more important to get in at the right time than to get in early. This week's technical analysis will show you how. Plus, we're sitting down with the managing director of Innovatoin Shares for a discussion about how investors can diversify their portfolios with a cannabis ETF. Investing Strategies starts now. Okay, let's get started with this week's market insights. Now, late last week, we saw the trade war taken to a new level with retaliatory tariffs from China and the U.S. increasing tariffs on Chinese goods in reaction. Now, the NASDAQ plunged 3% on Friday, marking its third loss of 3% or more in the month of August alone. But we all know that everything can change with a headline or a tweet, and stocks are pointing higher Monday on news of renewed trade negotiations with China. While that's a positive sign, an unresolved trade dispute provides uncertainty in the market. So on the downside, these are the levels investors should be watching. Right now, we are still holding the August 5th lows on the NASDAQ as well as the S&P 500. Now, a move below those levels would be a bearish sign. And even worse would be a drop below their 200-day lines. With the increased volatility as of late, investors should be cautious here. IBD currently has the market uptrend under pressure, which means it's not an ideal time to be aggressively buying stocks. For any open positions that you do still have, keep a close watch for sell signals. Take profits and cut your losses quickly. Moving completely to the sidelines might be warranted if conditions worsen. And as always, we'll be keeping an eye out for signs of a new market uptrend. But in the meantime, let's turn our attention to this week's industry spotlight on cannabis. Now, there's heightened investor interest around this emerging trend. So with me to make sense of it all is Andrew Kessner. He's the Cannabis and Industrials Analyst at William O'Neill & Company, which is an affiliate of IBD. Thanks so much for being here today, Andrew.
Great to be here, Alyssa.
All right, so we know there's somewhat of this frenzied interest surrounding the cannabis industry right now. Why do you think investors want to be paying attention to this? And from a profitability standpoint in their portfolios, what's it going to take in this industry to get us there?
Well, from a very high level, it's a tremendous existing market that's just starting to move to regulated channels. So in the US, the market's estimated to be over $50 billion annually. Most of that is black market, about 80%. In Canada, which just turned to recreational, to allow recreational marijuana, the market's estimated to be about $6 billion. And then it's more difficult to estimate the international market, but it's estimated to be at over $100 billion. And that's primarily illicit sales. So as we see more and more countries legalize medical marijuana, and in some countries like Canada for recreational use, we're just seeing the opportunity really broaden. And over the past few years, we've seen a lot of companies pop up, many of which are now publicly traded and available for investors to participate in this opportunity. Most of these companies are in Canada. There are some in the US that are more thinly traded. But as you look at the larger companies in Canada right now, a year or two ago, most of these companies were just a business plan with some founders who were very good at selling the idea and raising money. Now we're getting to the point where the Canadian recreational market started last October. We're starting to see sales really pick up there. We're starting to see these companies really expand into international markets. And so, when investors were looking at these companies a year or two ago, and they were really just looking at pitch books, now they're looking at revenues and they're looking at market share. And we really want to drill down in these companies more and pick companies where we think that the management team is one that can lead the company to do what they said they would do, and really look for operational excellence and execution and all the things that you would look for sort of a more standard, more mature company rather than a startup.
Right, and you mentioned Canada being a huge part of this right now with the recreational legalization there. We're coming up on that 1-year anniversary, so to speak. How has the market there really evolved in that time? I know you mentioned a pickup in revenues here, but there were a little bit of issues at first. Are those mainly resolved now?
No, not completely. There have been many issues with the rollout of the recreational cannabis industry since legal sales started in October of 2018. There have been a number of issues, both in terms of the supply that the companies are able to produce, and at the retail level, the store rollout's been quite slow, and the government's been also very slow to crack down on the black market in that country, which has historically been a very robust black market. So many of those issues are easing, but they still exist. And then the other thing is that, in the US, if you look at some of the mature legal markets like California, Oregon, Colorado, about half of the sales there are not cannabis flower, but they're derivative products. So edible products, vapor products, drinks, those aren't even allowed in Canada yet. They won't be legal for sale until October. So that's a big part of the market that has not even come online yet. So yes, the sales have been disappointing so far. There have been a lot of issues, but we're starting to see it pick up, and then we have this whole other part of the market coming into play later in the year. So, when we look at these companies, we're trying to see how they're doing now, but also how they're positioned for the market going, a year or two ahead.
Yeah, I think that's a really good point, because right now, looking at the short term for these publicly traded companies, a lot of them, at best have kind of spotty earnings and not really solid from an annual perspective. Again, at least in the short term, but maybe looking a few years out as the industry solidifies and continues to grow, maybe we'll see those fundamentals follow.
Indeed. So, at William O'Neill & Company, when we choose stocks, we really like to see companies with a number of factors, but one of the key ones is positive earnings. And with cannabis, we have to give these companies a little bit of a pass on that metric right now, just because it is such an early stage industry. The companies are in such rapid growth mode. So we're seeing a lot of the other characteristics that we like: rapid revenue growth, a new industry, new products, in many cases, solid management teams that we like. But on the earnings per share characteristic, we have to sort of give that a pass for many of these companies at this point. They're just really in build-out mode.
Yeah, definitely. Still very early, but I mean, a huge market already. But let's talk about a few individual names, pivoting to our stocks to watch this week, starting with Canopy Growth, because I think this is a really great example of what we've been talking about. But if you take a look at the chart, I mean, the stock has been in a prolonged downtrend, as are many of the names in this group.
Indeed, and Canopy Growth was the first cannabis company that we put on our focus list at William O'Neill & Company last August when we launched coverage of the industry. We continue to think that it's the market leader, that it has the best, is in the best position to be the market leader in Canada and internationally. They have the most really capital to do this, and they have the backing of Constellation Brands, a major beverage company. However, as you said, these companies, not just Canopy, but really the whole industry, has sentiment's been pretty poor recently. Like we've seen the last 2 summers, there's kind of been a summer lull in volumes and a decline in the prices. And so we are really seeing some technical weakness across the space. And so part of our investment approach is to look at not just the fundamentals and identify companies we like based on that, but really looking at the technical factors. And right now, we really don't want to catch falling knives. And so we're sort of on the sidelines when it comes to many of these names, including Canopy Growth, which we had on our focus list for nearly a year. We took off in early July, partially because there were some, at the management level, they removed their co-founder and co-CEO. So we want to see how that shakes out in terms of bringing on someone new. And the company's last quarter was actually quite disappointing, but we think that they really do have a chance to let the market know what direction they're really going to be focusing on and improve those fundamentals over the next few quarters. So we're watching them closely.
Okay, definitely. We'll keep an eye on that chart. But before we go, let's quickly touch on one of the names in the space that is actually in an uptrend, and that's Innovative Industrial Properties. Now, of course, a different business completely here, with it being a REIT. Although if you look at the chart, a little bit of resistance around the 50-day moving average, but it's in an uptrend. So what do you say to investors who look at this and say, oh, well, this is one of the only ones right now in this space that's moving higher?
Sure, yeah. Innovative Industrial Properties is really one of the only companies that has an attractive looking technical profile right now in the cannabis industry. It's really been on an uptrend for a while and got up to a certain level and has pretty much stayed there. But we think that there are a number of sort of unique characteristics about the company that have led it to be able to advance that much. Some of which are attractive, but ultimately it is a real estate investment trust. So, it's really the only vehicle on a major U.S. exchange other than, an ETF index fund that allows you to participate in the industry, in the U.S. industry. So most of the U.S. companies can't trade on major exchanges yet, just because cannabis is still federally illegal in the U.S. IIPR, Innovative Industrial Properties, does not directly touch the plant, so to speak. So they buy properties from cannabis companies and lease them back. So they're really just a property owner. But if you look at this company in the context of real estate investment trusts, which is what it is, it really trades at a very steep valuation premium compared to those REIT peers. So we think IIPR has really benefited just from sort of a scarcity factor, really being the only large vehicle that institutional investors who can't invest in plant-touching stocks can participate in, and it's traded on the NYSE, and so it's really benefited from that. But we think investors should be careful when looking at it, because it is trading at such a high valuation for the type of investment vehicle that it is.
All right, well, thank you so much for providing all of this context for us about this emerging trend. We know that there's definitely still a long way to go, so we'll be keeping very close tabs on it. Thanks, Andrew.
Indeed, great to be here. Thank you.
All right, and coming up next, we're going to continue the discussion about emerging trends and when to buy them. It's key to make sure that when it comes to the chart, the trend is your friend. More on that when we come back.
Leaderboard helps you invest better with winning stocks picked by our team of experts. Select a stock to see current analysis. Check the chart for buy and sell points, plus get real-time price alerts. Improve your investing with Leaderboard. Start your free trial today.
When you have your sights set on an emerging trend, whether it's cannabis or solar energy or whatever it may be, the mainstream mantra often says that it's a good idea to get in early before that trend explodes. But when it comes to buying individual stocks, it's better to get in at the right time than to simply get in early. So today, let's discuss IBD's tips for buying hot stocks in new trends. Now first, stocks in many emerging industries aren't usually profitable from the get-go. Revenue growth might be on fire, but those companies are likely spending a lot of money to help their businesses grow. So when you happen to see weak-looking stock charts from an emerging group, that's often seen in tandem with weak fundamentals, like a lack of profitability or even spotty profits from quarter to quarter. So right now in the cannabis space, we are seeing a lot of stocks in downtrends. Some of them are turning in profits, but there aren't many that are showing earnings growth on an annual basis. So when you want to buy stocks from an emerging trend, but you see many individual stocks in that group in a downtrend, here's what you do. You want to watch to see if stocks in the group can break their downtrends. Now, as an example, let's take a look at the monthly chart for Enphase, which is one of the hottest stocks in the solar group. The solar industry is having a rebirth right now after a period of big declines, so potentially kind of similar to what we're seeing for individual names in the cannabis space at the moment. So how do you know if a stock is breaking its downtrend? Well, you want to draw a downward sloping line that touches all of the price highs during the stock's declines, like this. Now, when you see a stock move above this line, the downtrend is broken. So that's the first positive sign that you want to see. Now, it's important to wait for the downtrend to be broken and not jump the gun too early. Otherwise, that could be like trying to catch a falling knife. And instead of potentially sitting through an unknown period of declines, a stock breaking above its downtrend makes sure that the trend is your friend. Okay, so then you want to wait for the first chart pattern that forms above the stock's 200-day line. Now with InPhase, we saw that right here in late 2017. And the stock had several more base patterns and breakouts in the following year. And then InPhase broke out of a cup with handle base in January of 2019. And looking closer at this move on a weekly chart here, now that breakout was fueled by fundamentals that were improving even more, and the stock's gains really accelerated from there. Shares are up some 500% since that January breakout. Okay, so to recap, if you're looking to buy stocks in an emerging industry, but those stocks are in pronounced declines, look for one of those stocks to break above its downtrend. Then wait for the first chart pattern that forms above the 200-day line. Make sure to do all the necessary research about the stock and the company, but from a technical perspective, that would be your signal to buy. Now, keep an eye on improving fundamentals, which are likely to accelerate share price gains. While a number of cannabis stocks are in downtrends right now, it's important to keep them on your radar for if and when they do start moving higher. Because there's one thing for sure, we are in the early stages of a relatively new industry that still has a lot of room for growth. Now, of course, buying individual stocks is not the only way to profit from an emerging trend. So when we come back, we'll be learning more about two ETFs that track hot trends, cannabis and blockchain. We'll be right back.
This season on Cultural Capital, we are in New York City and San Francisco. Come with me as I tour some of the world's most innovative companies, from Squarespace to C3AI, Giphy, and Figma. Learn how CEOs built growing companies while maintaining the ultimate office culture on Season 3 of Cultural Capital on the brand new NASDAQ.com.
Another way your portfolio can gain exposure to an emerging trend is, of course, with an ETF. So here to break down the ins and outs of one of the cannabis ETFs now on the market, THCX, is Matt Markevich. He is the Managing Director of Innovatoin Shares. Thanks so much for joining me today, Matt.
Thanks for having me.
So for investors who aren't fully familiar yet with this industry, with it being still pretty new, what should investors know about investing in a cannabis ETF?
Well, first of all, the volatility in the cannabis sector is extremely high. You have months where one stock could be up 100%, being the top gainer, and one of the stocks that's the lowest loser can be down 80%. That volatility is very tough for a lot of investors to stomach. So we feel that taking a diversified approach to building a basket of cannabis stocks is probably more appropriate if you don't know too much about the sector. Secondly, there's also not much research on the sector. Andrew, outside of course, but his research focused on companies. We're more concerned about the overall direction of the industry itself. So, taking that diversified approach within a tax-efficient basket is the way that we view it's best to approach investing in cannabis right now.
All right, so when we're looking at the makeup of this ETF, it obviously tracks an index. Can you talk a little bit about what has gone into structuring the index and in turn the ETF?
So, as you mentioned, the ETF tracks an index, and there are some hurdles to be included in the index, one of which is stock must have a minimum $100 million market cap, that's US dollars, and trade at least 250,000 shares a day. We rebalance the portfolio monthly, which helps, one, to decrease the volatility, and two, allows us to be more flexible when adding new entrants to the capital markets.
All right, so looking at the components of the ETF, can you talk a little bit about what the investors are actually getting when they're investing in this ETF in terms of the different types of companies and their involvement, in the industry from different angles?
Yeah, we refer to that as sub-themes. So a lot of investors may just think that cannabis is growing and distributing the plant. While there are actually a lot more parts to the industry, as you mentioned, such as ancillary services, so companies that may sell lighting and equipment that help control temperature in the grow houses. We have testing companies. We have companies that produce dehydration technology to dry the flower. There are companies such as Valens Grow Works, which is an extraction company that helps to take the oils out of the flower. So those are some of the sub-themes. In addition, this is an international story. This is a global growth story, and we do have a couple companies exclusively focused on operations outside of the US or Canada, Chiron Life Sciences and Pharmacielo, which look at the Latin American and South American market for cannabis.
All right, well, with these different sub-themes in terms of sentiment, because for some of the main players, they've been moving lower. Are you seeing different sentiment for the different subgroups, or how does that work?
Well, that's actually interesting because the process by which we select stocks, or part of the process, is we use a natural language processing algorithm that reads media sources, credible media sources, and is looking for positive or negative sentiment within the industry for particular stocks. And right now, the sentiment, of course, is fairly still negative for a lot of the sector. But one of the stocks that had an overly negative sentiment last month was a company called Innovative Industrial Properties, which I believe Andrew discussed. We removed it from the portfolio at our last rebalance, and so it's had a great run year to date, and we thought it best to take it out of the fund and the index accordingly.
Interesting. Are you able to talk a little bit more about the specific language or sentiment that you're keying off of to make some of these decisions?
Well, this is an overlay that we use to help make the decisions when building the index. And as I said, it's pretty negative right now on the sector. The next rebalance will be early September. Might have bit of a difference then. We'll have to see how things shake out. The sector, as you know, has been hurt pretty badly this summer, and I'm hoping that it will change, but we'll see.
Right, and since we are still very early on in this space, how do you see the makeup of the ETF evolving as the industry continues to grow?
I would expect to see more companies involved in international cannabis operations, so just strictly focused on markets ex-US and Canada. Right now, of the 36 stocks in the portfolio, 18 are Canada licensed producers, or LPs, so they make up an overwhelmingly large part of the portfolio, but we're only allowed to own stocks in markets where cannabis is legal, and that is Canada right now predominantly. As you mentioned, though, we do own stocks in other sub-themes, such as Charlotte's Web, which is a US-based CBD play. It's the largest holding in the portfolio. So I would also expect to see more CBD companies in the portfolio over the next couple of years as well, as the compound becomes a little bit more widely used and known, especially amongst investors.
Interesting. And since the ETF itself hasn't been trading for that long, what are your thoughts in terms of the investor appetite that you've seen and the traction for this type of product coming to market?
Well, since launch on July 9th, we've accumulated the most assets of all the cannabis ETFs, of the 5 that are out there now. And so that's been encouraging. Also, as your audience will probably be concerned about, our trading spreads have been extremely tight. We're the second tightest trading spreads of the 5 cannabis ETFs. We've been very encouraged with the uptake and the interest from investors, especially investors that aren't familiar with many of the companies in the portfolio.
All right, well, that's very interesting. And Innovatoin Shares also has an ETF that tracks another trend that's been hot in the last few years, and that is blockchain, the ticker there, KOIN. And what can you tell me about this ETF and what makes it stand out in this trend?
So we launched Coin in January of 2018. It was our first ETF. And blockchain, unlike cannabis, it's a little tougher to explain to a lot of investors because it's a newer concept. Of course, cannabis has been around for thousands of years. Blockchain is not necessarily a consumer-facing technology right now, but the portfolio holds global stocks that have exposure either from a revenue perspective or they're using blockchain to drive operational efficiencies to blockchain technology. and it's a little more appropriate using this patent pending technology that I mentioned before, looking at media sentiment, because blockchain is, as you know, an often covered subject in the media, or it has been more, cryptocurrency included.
Right.
So there are diverse industries in the portfolio, anywhere from food, financial services, semiconductors. So it's a multi-industry portfolio, all within the one theme.
All right, well, thank you so much for sharing your insights today about these two ETFs and really diving in to THCX with us. Really appreciate it.
Sure, thanks for having me.
All right, and thank you all for watching Investing Strategies. Now, due to the holiday, we'll see you next Tuesday. Our show will be all about investing during times of heightened volatility. For Investors Business Daily, I'm Alissa Coram.